Welcome back to Freedom Finance with Lanny, guys. Today's video is going to be focused on an investing topic that I think we all go through at some point in our personal finance life. You were with an employer, you were investing in their 401k, maybe it was pre-tax, maybe it was Roth 401k, and then you leave. But you forget about that 401k and you don't do anything with it. You know, it stays invested into what it was at the time you were there. You forget about and don't think about rolling it over to another brokerage that you currently have. And then they change up a bunch of things in that old 401k that makes you, almost forces your hand to want to take action. And that's where I'm at right now. I'm at this pivotal point right now, a tipping point, because my wife and I have old 401ks from Vanguard. Yes, we have old Vanguard 401ks from a previous employer, and they've just did something that put us to the tipping point to do and think about a rollover, guys. So grab your favorite beverage, your liquor, your beer, your wine, your espresso, baby. Even though it's late, you're still rocking with me, guys. And let's dive into my personal finance dilemma of rolling over my old Vanguard 401k. What should I do? Let's dive in. So this is the video. I'm going to get right into it, guys. Again, I really don't script out anything here. I just really talk about kind of what's going on in my personal finance life to hopefully help you and see if we share something similar, or if you somehow come across this, you know, this video helps you. So my wife and I, we have two old 401ks through a former employer that is on Vanguard. Yes, old Vanguard 401ks. And she's had hers still sitting there since she left for about probably close to 8 years. And for me, it's about six and a half years since I've left. The reason why it sat there is because, hey, it was invested in a Vanguard, pretty much Institutional Index Fund, VINIX, which is pretty much like the total stock market or the S&P 500, pays dividends every quarter, pays capital distributions, usually at the end of the year, all tax protected because it's in a 401k account, guys. So it was just growing all by itself. You know, they may have been feeing us about $6 to $7 per quarter, so double that, so $12 to $14 per quarter between both accounts. But at the time, we were like, hey, we're not sure where our final brokerage is going to be, so let's not roll it over quite yet. Plus, we're okay with the investment on how it's performing and what it's doing. But August 30th, something happened within the old employer's 401k option related to what we were invested in. Again, we were in VINIX, a mutual fund that paid quarterly dividends and also paid capital gains distributions when there were some at the end of the year. They actually converted, they removed that option, it appears, and then they converted that into what they call a Vanguard Institutional 500 Index Trust Unit D. It has no ticker symbol, there's no capital gains distribution, there's no dividends that they distribute either. So you can't really track it, and it doesn't work well with my spreadsheet currently, which drives any accounting nerd nuts, any Excel spreadsheet guru nuts like myself, guys. So I always have to then manually log in, see what the price is, pop it in. So they did that on August 30th, and now it's been, you know, almost a month and a half, close to 2 months now that it's been in there, and I think it's time, guys. You know, I really want to roll it over. Both my wife and I have pre-tax and Roth 401k mixed in the overall balance. And you might want to know what the balance is. Again, I'm an open book. I'll throw it up here on the screen. My wife's 401k, she had her old 401k has $91.7 thousand in there. And my old 401k has $230,000 as of October 30th. So we have about $322.7 thousand sitting over at Vanguard, getting a quarterly, in total $12 per quarter fee, or $48 in fees per year, sitting in this Institutional Index Trust Unit D account. And it's hard to predict what dividends or distributions would kind of be like if it was not in that. So it really messes up the personal finance spreadsheet. Granted, it's all S&P 500 based. Again, you can't really look up the price on the everyday market, if that makes sense. So it got me thinking. Okay, we have accounts. We both have accounts at Fidelity. We both have accounts, with SoFi as well. Obviously, you guys know, link below in the description, get your free SoFi investment account. That's where I buy my VYM, VOO, VIG, my Vanguard ETF trifecta every day. If you sign up, you'll get yourself some free stock. Obviously, I highly recommend it because you can set up automatic partial shares every single day, every single week, every single month, however you'd like to do it. So we have accounts there, and with SoFi, we also are pre-approved there for a potential house mortgage in case we ever find a house, which that actually expires the pre-approval here in about 2 months. So just something for us to keep in mind. And they also do, I think at this point in time, a 1% bonus match on a transfer. Somebody can check me on that and put something in the comments, guys, which would be a little over $3,000 just to bring it over. Or we can do nothing, right? We could just leave it in Vanguard and just say, hey, we'll continue to pay that fee. I did call Fidelity because I was like, okay, I'll just move it over to there to make it easier. One less account at Vanguard to manage, and we'll just roll it over back into the VINIX or a VOO ETF within a traditional IRA and a rollover IRA, or a rollover IRA or a Roth IRA, whatever you want to call those two accounts that it would be split into. And then I asked Fidelity on the phone, like, oh yeah, do you guys have any, do you guys match any bonus funds? And the guy was like, oh, well, we'll waive any, we'll pay you back any fees that Vanguard would charge you on your exit. But you'd have to actually sit down with somebody to get a bonus on that transfer. And I'm like, okay, you're going to play hardball on a bonus transfer when Robinhood offers one, SoFi offers one, and there's like 10 other accounts I can list off that are currently offering one in the fintech space, right? So I didn't want to do that right away. And then I thought about SoFi. Okay, so with SoFi, if they possibly might get our mortgage business, couldn't I leverage that maybe for like a 1/4 point off of our mortgage rate? So that might be up our sleeves right now. So again, I'm not here telling you what I'm doing. I'm here giving you the options of what I'm considering doing. I would love your feedback as you're listening to this video. So here we are, again, it's mid-October. We haven't found a house yet. So what I'm thinking of doing in this situation is if we find a house within the next 45 days, leverage that into SoFi to get the bonus and to get a possible leveraged negotiated discount to the mortgage rate, or some sort of closing cost waiver if we bring over over $300,000 of assets, and they're in a growth phase. So I think that they would be highly interested in that. And if we get to this point and it's not there, what I probably would do, and you guys tell me, do you guys usually try to roll it over in Vanguard first to a rollover IRA, a Roth IRA, and then do it after that to a Fidelity account? Or do you guys just go 401k right to Fidelity? What's been easier for those that have converted and rolled over their old 401k to a Fidelity 401k from Vanguard specifically? I'd be curious about your experiences. But that would be like step 2. If no house is found, we would move it more than likely into our Fidelity accounts, closing out the Vanguard account, one less account to manage, and we would put it in pretty much the S&P 500, whether it's an index mutual fund or an ETF, guys. Keeping it very simple just because, hey, this is money that we're probably not going to touch unless we do some sort of mega super backdoor Roth conversion, which might be down the line. That's kind of our 2 options that we're thinking right now. So really it's on a timetable. We'll know more by the end of November what we plan to do. Again, sitting here with Vanguard, 2 401ks, we're trying to simplify not just the investment inside of our portfolios lately, but we're trying to simplify the number of accounts that we have as well. Let me know in the comments what you guys would do in our current situation, guys. I appreciate the feedback. Let me know if you're also in a similar situation and what you're thinking of doing, to see if I could also provide some tips and advice as well. Subscribe to this channel, guys. Like this video, and I cannot wait to catch you on the next one.